All right. Good morning, afternoon, and good evening once again, and welcome back to the UK Live. It is 3rd January, 2:30 a.m. Eastern. Two things. First, thank you for a couple of feedbacks that I've received. It means a lot to me, and I've taken that seriously and in the right way. That was the first thing. The second thing, I never wanted to wanted that you would lose money because of the wrong trend that we got in gold and euro in the last couple of weeks, and the dollar index as well. What I've done is we've cleared up all the desk, most of it, except for gold after a signal has been produced. That's again a 50% capacity as well. And I also pledge to get it back what has been lost, if at all, in the last 2 to 3 weeks. Overall, it's not in the negative, but yes, last 2 weeks I accept that it has been on the wrong side, and I need to correct that. All right. So I will do my best to do what is needed, and we are watching now, and will be trading less in terms of the frequency. What I want to say is we'll be going more on a swing type of trading rather than just intraday or a short-term kind of a trade. Right? I think that would be serving everyone in a right way. All right. So let's get started off with this note, and we will discuss euro, pound, gold, and the dollar index in this session. We'll go for about 10 minutes, as I think so. All right, euro USD, we are not trading right now, but let's look at the chart setup. I'm just placing some labels here: wave counts, potential wave counts. That was an ABC drop. Further, it has rallied until till this moment. It has rallied an ABC. Now, if it fails to break above 2091, then it could, that's a 3 down and 3 up, followed by a 5 down, making it as a 335 overall wave structure, which could bring down prices below 1.1550. This is one probable wave count. The percentage would be less for this at this point in time. The second alternate, or the first alternate, would be this count is still okay, ABC, and on the other side, the right hand side, what we have seen is 3 waves. So I may want to label it as 1, 2, 3. We might have a 4th over here, and then a rally towards a 5th wave. All right. This one, the second, the first alternate, has got more probability. I mean, this time you don't know what would be the percentile, but here's the trade plan. If it is doing an ending diagonal, this is the trend line. We would want to watch out for prices dropping through 1875, somewhere here. A bounce there, we will buy. That's a trade plan. Why we want to buy? We want to stay with the current trend. We don't want to go counter trend aggressive. We've done quite a few number of times, and it's not advisable right now, although the risk is very less. Okay, but we are not taking counter trends for now. So we'll wait for wave 4 termination somewhere around the 1850 1875 mark. If it bounces from there, we'll take a call on the long side. All right, if it breaks the trend line, that's it. We are counting on a 3, 3 and 5. So we'll look to sell on rallies after that. All right, so that is Euro USD trade plan. We are not doing anything right now, we're just flat. Dollar index on the other side is slightly different, I would say. Different in the sense that it has made a 5 waves rally. So it could be a 535. I'm not labeling, just using an arrow mark. Here you can see wave 1, 2, 3, 4 and 5, followed by an ABC until now. Alright, aggressive trades. If I were to give an aggressive trade call, I would still go long with a very tight stop loss below 91.50. At this point in time, I'm waiting for a confirmation on a smaller time frame to give us an impulse rally over here. At this point in time, it looks like a 5 and then an ABC 3, which gives us enough potential for a rally, another 5 waves up, bringing us back towards the 95 and 96 handle. Second, or if this is not going to work out, then the same thing, it would be considered as fourth wave, and the fifth wave is turning out as an ending diagonal. That is wave 1, wave 2. Each of them are 3 waves, and ending diagonals also do have every sub wave unfolding as 3 waves, so that's not a problem. 1, 2, 3. Wave 4 should terminate somewhere in the vicinity of 93, and then yet another drop towards the 9100. Alright, we are absolutely flat in the euro and the dollar index at this point in time, but looking at the oscillators and looking at the chart patterns which are developing right now, an impulse or at least a break above 92.30, the first resistance, and then a drop would enforce us to go long, at least with a tight stop loss towards targeting around 93 at least. Whatever is the update, I'll be sending on through the Telegram channel. Alright. The only 2 trades or 3 trades that we are holding is pound, and I'm very confident on pound, at least what it has done. As far as the wave counts are concerned, 3650 remains a challenge for bulls, and till the time prices stay below 3650 or 60, ideally game remains in the hands of bears. Here it is. So please stay short if you tripped your stop loss. Another confusion was a short term and the long term trade. Okay, that is also been rectified from this moment at this session. Right, we need to stay or place our stop loss about 3650, whether short term or long term right now. If you are taking trade right now, have your stop loss please above 3650 60. That is the line in sand for bears to remain in picture. Impulse down, 3 waves up. That was I think the third wave. 1, 2, 3, 4th and 5th. Alright, by all means, if this wave count is correct, we should be seeing a drop lower, confirmation for if you are not an aggressive trader or if you're not holding shorts from earlier call, then you would want to, and if you want to trade conservatively, then wait for this support to be taken out, please. If you don't want to trade aggressive, please wait for 3470 or 3460 to be taken out. You will get another chance to sell on rallies through the 3540 mark. All right, so aggressive traders and for positional trade call, we are all doing a positional trade here. Kindly remain short with a stop loss about 36, 50, 60 levels, targeting much lower. This is a positional trade call, so it's going to break below, it's expected to break below the 32 handle and the 31 handle and the 30 handle as well going forward. All right, but if you are wanting to take a conservative trade call, then please wait for prices to break below 34.70.80, then allow it to rally towards 35.40.50 and then go short. All right, okay, this makes things very clear. Gold. Just one last wave count. The boundary which we thought it was working upon was incorrect. This A, B and C, that's the count I think it's been taking right now. Capital A and then small a, B and C. That makes us that gives us a capital B over here. Along with the Fibonacci retracements. We took off gold, but after that, after a confirmation on the signal side and an engulfing bearish was confirmed, we had short 50% capacity right at the 61.8% now. Also on a smaller time frame, if you look at a 15 minutes or an hourly chart, there is the first impulse which is almost done. We might see a pullback towards the 1317 mark, right there, the resistance zone. So the selling price was between 1314 and 1318. All right, that's the selling zone. And the stop loss is just about that high, which is again 1325. All right, we have just taken one risk trade in gold, and the remaining we are wanting to stay flat and only trade when a confirmed signal or towards a larger trend. Crude oil on the other side, there is no change as far as the wave count and the structure is concerned. 3 waves are complete from the February 16th in A, B and C, which is also falling in the vicinity of the previous wave 4 right here. Believe it or not, that is that resistance zone till the time prices remain below 62.50 should be heading south. Short term confirmation, if you are a conservative trader, watch out for a break below 55 and 56 from here, and then look to sell on rallies again. As far as the daily chart, as concerned, we have got a doji yesterday, and evening star close today would almost confirm a reversal, a bearish reversal. Wait for a break below 55.56 if you are a conservative trader, and then look to sell on rallies towards 58 and 59 once again. For positional trading, crude still remains short. We are short from 59, 70, 60. Stop 62, 50 and target 55, and sequential targets are 55, 50 and 45. Alright. So these are the trade setups for now. Let's bring the current session to a pause, and I'll be watching closely for euro and the dollar index, whether we should take aggressive, even if you're not taking, what I suggest is at least watch out. We're just beginning 2018. Please watch out, and then once you think that okay, fine, it's going on the right side, or a couple of trades, but after watching you may want to take it. All right, until and unless you are prepared to take that particular aggressive risk, please do not trade, at least for now. All right, even if you're not trading, just keep a watch on that. All right, so I'll be back again after a few hours during the New York live at 8 a.m. Until then, good luck to your trades, and thank you for joining online, or if you're watching it on an offline mode. All right, if you're not yet subscribed, you might want to do so. This is a part of trading, and I'm going to continue even after some losses. That failures are something which they need to be taken as a positive sign. All right, so I'll be continuing to do these sessions and also taking my trades in gold. Good luck to you, brothers and sisters, and I will see you back again after a few hours during the New York live. Until then, please take care and God bless. Goodbye.